Good morning. It's Wednesday, September 24th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So we saw a massive injection into silver ETFs yesterday. And at the same time, Double Line's Jeff Gundlach is telling investors to shift 25% of their portfolios into gold. So the question remains, is this a bubble? Well, as long as we continue to see higher all-time highs and higher contract highs in gold and silver, as indicated in the Blue Line chart pack, as well as higher lows and higher highs in the Blue Line tactical ranges, I believe this market continues to perform. Now, what could derail this rally? I believe JP Morgan said it best yesterday. Perhaps an asteroid hitting the earth is what takes this thing down. So let's check it on your setup here in precious metals and also the US equity market. So gold trading just below its record highs here, down about $20 at $37.95. We could attribute some of the strength in the dollar index, some of the liquidation in the US equity markets as pulling a bit of a correction here in the gold and in the silver market. Silver down just under 1%. Down 40 cents here at 44.21, and gold again just below that 3,800 level. Now looking at some things coming out here, the markets and traders have a cautious stance as they await key U.S. inflation and jobs data coming out here for the remainder of the week. Traders are going to focus on that U.S. personal consumption expenditure price index, which is due out on Friday. That's the Fed's preferred measure of measuring inflation. Now the S&P 500 scoring 25 record closes and pushing back higher here in the overnight session, sitting at about 67.24, kind of bouncing off of that key level of support, some pocket support right around that 67.09 down to 6700. Where can we rally back up to? I believe 67.40, 250 is going to be your key level of resistance here on the day. Now looking at the S&P 500, a lot of discussion here about that 12-month forward price to earnings ratio sitting at 22-9. This level here, this century here has only been exceeded 2 times here. It was during the dot-com bubble, and it was also in 2020 when the Fed just slashed rates to zero and garbage and trash were pushing on up higher here. So the prospect of the Fed cutting rates here is what is going to continue to fuel this rally, in my opinion. And Fed Chairman Powell on Tuesday said that he offered no real hints to support the rate cut in October. And he also discussed about how there was high valuations in the stock market. And that's where we saw a bit of the market pull back. Now, what I like to do is slice out the top 10 as far as the S&P 500, look at those PE ratios, and they sit right at about 23 to 28. And you go back to that dot-com bubble, and it was closer to 40. So we, in my opinion, are not at those frothy levels yet, and frothiness just continues to brew anyways. So continue to stay with these positions here on the long side here until we get those key technical breakdowns here of support, until we get clear, decisive action where it's not just a one-off event here and the market continues to break down and a series of lower highs and lower lows on a chart, breaking some of these critical support levels that we outlined in the chart pack here. So you look at the S&P futures, well, we'll push it up overnight here. You've got Alibaba, you've got Micron here. They are fueling those AI bulls. So you got the S&P 500 up about 0.1%. You got the NASDAQ up about 0.3% here. And then you shift over to geopolitics here and defense stocks. Well, those are in focus after Trump said that NATO should shoot down Russian aircraft that violated Poland's airspace. So we have oil futures holding their gains here up about 1%, sitting at 64.08. The resistance in the pocket zone that we've seen is a $5 range over about the past 2 months here, getting up to about 65. That's where things we start to hear about peace talks and things like that. We start to discuss these higher levels of inventories that are coming online and the market being flush with cheap oil here and the prospects to push that oil prices down here into the 50s to try and derail Russia's ability here to fuel through funding their conflict here with Ukraine. That tends to happen in that rhetoric when we start to push up near the resistance. When we get down near that support here, it seems like the rhetoric of geopolitics ramps up here and the discussion of tight inventories comes out. And until we break this cycle here back and forth, we really seem to be trapped within this trading range here. Now, some other things that we're watching here, looking at the global markets and European trading, well, those stocks fell here as the tempered optimism around the path of U.S. interest rates kind of simmered here after Jerome Powell's speech. Then you go over to Asian trading. Well, those stocks, they did advance, and it was really Alibaba's AI spending plans that really continued to broaden out those tech shares here and helped support some of the tech market. So the ASCI Asia Pacific Index here gained about 0.1%. Looking at the US economic data here, we're going to have new home sales here for August, and we'll have one Fed speaker here later on today. That's Fed Daily here. Now, what are markets thinking about the interest rate cuts? We've been checking on this every day here because it's very important, a few different things. And I've discussed that over the past few months and even over the past year, what we tend to hone on this channel surrounding precious metals is what's driving that market. For a while, we look at things like the gold-silver ratio when it's up in the 90s, in the hundreds here, trying to come up with some kind of playbook as far as how far will things extend before they start to snap back. Other things we'll watch here are ETF flows, and of course, we're going to watch the Fed interest rate cut expectations. And we had a big uptick yesterday surrounding that 25 basis point interest rate cut and really zapping out the 50 basis point cut. So it's a 94.1% chance of a 25 basis point interest rate cut at that October 29th meeting. So circle that on your calendar. Only a 4% chance here of no change. You go over to the poly market, it's an 83% of a chance of a 25 basis point interest rate cut. You have a 4% chance of a 50 basis point cut. And I believe because it's a betting market, people are taking some long shot bets here by going with that 50 basis point interest rate cut, and 13% say there's no change. Now, the thing that I led this off with, we saw that massive injection into silver ETFs yesterday. Well, it was a 5.58 million ounce flow into the ETFs, pushing that year-to-date percentage change up 14%. So that's a 1% shift on the upward market. And as silver gets bigger, as the ETF gets bigger, well, it takes a lot more ounces in order to push that rate of change higher here. So it's the third straight day of growth. So we're looking at Friday, Monday, Tuesday, all pushing on up here in the ETF flows. And it's really positioning for this breakout and this possible test around those round numbers here, like $50, like $60 and above. Now, something people should note is that as prices of silver go up, you're probably going to see some liquidation as far as onto coin shops, onto pawn shops, people kind of cashing in on some of these metal that they've been stacking for years and years. Also, you'll start to see that industrialized companies that are utilizing this product here as an end result will start to look at alternatives, perhaps some kind of copper type substitute or things like that in replacing that silver. So it does have a limit as far as how high it can go. What that price objective is, what that price limit is, when you start hearing hundreds and hundreds of dollar price target on silver, I think that starts to get a bit far-fetched because of the demand structure of it becomes destroyed here. Now, looking at the ETF flows on the gold market, ETFs added 79,000 troy ounces of gold to their holdings, and that's the fourth straight day of growth here. And gold up 43% year to date here, and it tacked on about 0.5% here in the previous trading session before we started to see that sell-off occur towards the end of the day. So we want to keep an eye on some critical levels of support. Gold, I really think it's right around that 37.50 level. Silver, you get closer to that breakout point right around that 44 level. Platinum testing the resistance zone here, that double top on the charts, meeting our upside objective here that we outline in the chart pack. Copper futures continuing to support higher lows and higher highs, really a lower volatility market here at the moment. And then you get down to Bitcoin. Well, that making another higher low on the charts and pushing back on up. We'll want to keep an eye on that 116 level, which is our pivot zone. So if you'd like to open up a futures trading account with us, send an email to info@bluelinefutures.com. And remember, futures and option trading, well, it does involve risk of loss and it may not be suitable to all investors. Good luck, good trading.